Ever stumbled upon a bank online, maybe seen some enticing interest rates and thought, is my money safe there? Especially when it's a name you're not super familiar with. Today, we're diving into that very question, specifically focusing on a bank that might have popped up on your radar, pibank. Now, before we get into the nitty-gritty, it's crucial to understand why this question even matters. When you deposit your hard-earned money into a bank, you're trusting them to keep it safe. But what happens if the unexpected occurs and the bank faces financial difficulties? That's where deposit insurance comes in, acting as a safety net for your funds. In the United States, the gold standard for the safety net is the Federal Deposit Insurance Corporation, or FDIC. This independent agency of the U.S. government was established way back in 1933 to maintain stability and public confidence in the nation's financial system. The FDIC guarantees deposits held in member banks and savings associations up to a certain amount per depositor, per insured bank, for each account ownership category. Currently, that magic number is $250,000. So, if you have less than that in an eligible account at an FDIC-insured bank and the bank fails, the FDIC steps in to protect your money. Pretty reassuring, right? So, with that crucial context in mind, let's circle back to our main question. Is pibank FDIC insured in the USA? To answer this directly, we need to do a little digging. Pibank itself is actually a Spanish banking institution. It operates primarily within Spain and focuses on providing digital banking services and competitive savings products. While pibank might offer services that are accessible online and potentially to individuals outside of Spain, its core operations and regulatory oversight are based in Spain. Therefore, pibank as a Spanish bank is not directly insured by the United States FDIC. The FDIC's insurance coverage extends to banks and savings associations chartered in the United States and their branches located in the U.S. However, this doesn't necessarily mean that pibank is an unsafe place to keep your money, especially if you are a resident of Spain. Spain has its own deposit guarantee scheme, the Fondo de Garantía de Depósitos de Entidades de Crédito, FGD. This fund serves a similar purpose to the FDIC, protecting depositors' funds in member institutions up to a certain limit, which is currently €100,000 per depositor and per credit institution. So, if you are a resident of Spain and banking with pibank in Spain, your deposits would be covered by the FGD, the Spanish equivalent of the FDIC. The key takeaway here is that deposit insurance is typically specific to the country where the financial institution is chartered and operates. The FDIC is a U.S. entity and primarily covers deposits in U.S. banks. If you're considering banking with an institution that isn't based in the United States, it's always a good idea to research the deposit insurance scheme in that particular country to understand the protections available to you. Understanding where a bank is based and what deposit insurance it falls under is a vital step in making informed decisions about where to entrust your finances. It provides peace of mind knowing that your savings are protected should unforeseen circumstances arise. So, to reiterate, while pibank may be a legitimate and potentially attractive banking option, particularly for those in Spain, it is not insured by the FDIC in the United States. Its depositors are covered by the Spanish Deposit Guarantee Scheme, the FGD. With that said, thanks for watching and until next time.